Welcome to this episode of Quarterly Learnings. Justin, what the fuck happened with Robinhood?
Oh my God. Well, we talked about it last week a little bit before the whole, shitstorm happened, or a little bit before it did. We thought it was over. We thought the shitstorm was done, but yeah, a little bit more happened since then.
There was a second shitstorm and a third.
Yeah. Today it is not good for people that were heavily invested, or maybe it is. I don't know. Depends what they did.
Yes, unsurprisingly, the short squeeze came down. Crazy, the line didn't hold.
No, it did not. Just how everyone knew it was going to happen. Well, hopefully everyone.
I would be willing to bet a lot of people didn't think that was going to happen. I mean, probably exactly what we thought happened is the majority of individual investors are left holding the bag by the end of the day. I mean, GameStop's not back down to its earlier high before this happened, but it, isn't. It's at what, 90 right now instead of 450, what it was a few days ago.
Yeah. I think 85 as of right this second.
Yeah, and it's not just GameStop. AMC, BlackBerry, KOSS, they all got hit as money flowed out of there, and yet all the indices were up today as money flowed from those stocks and back into what we'll call, for brevity, normal stocks.
Right. Well, if somehow you're out of the news cycle, even if you are not very into the market, like, you probably saw something on this. It got memed everywhere. I mean, you can see in the background me. This is fine. The world's burning, but whatever. So if you were out of the news cycle, or even if you were out of the news cycle, that the Redditors, basically tried to push the price up. They saw that shorts were being. Let's see, help me out here, Pate.
They saw that there were highly shorted stocks,
and
yes, they went after them and obliterated the shorts. And now that trade's kind of over, unless there's some sort of resurgence. But that's not what we're going to talk about today. We're going to talk about the shit show that was Robinhood press relations today, or public relations. So what happened in short is that, I don't remember if it was late last week, Robinhood came out and said, oh, hey, due to market volatility and for your protection, because you retail investors are dumb, the dumb money, that we're no longer going to let you buy certain stocks. Short to say, that pissed everyone the fuck off, and everybody got heated online against Robinhood. I mean, that was one of those days on Thursday that you had to be on social media just seeing this shitstorm go down, because, like you said, this GameStop saga permeated every single aspect of my life, from sports to friends, family, and then our normal stock market and business news.
Everyone was talking about it. Everyone, even people that had no idea what the stock market even is, like, it is everywhere. You could not avoid it.
Yeah, and then
it was great. Look outside in. It was great.
I didn't trade in this. I missed it at the beginning, and I'm not dumb enough to follow it. So, because I knew it was going to go down, and you don't know when it's going to go down. But less about the stock move and more about, so Robinhood restricting buying was likened by most people as market manipulation and bailing out the hedge funds. What do you think about that?
Absolutely. Now, regardless of what email came through this morning, if you're our Robinhood trader, claiming that they did not want to help hedge funds at all, and it was all because of deposit requirements, you gotta believe that there was some kind of manipulation here, and there's gonna be some lawsuits following this to try to prove that.
They've already been filed.
Right. And we kind of talked about this earlier. Is like, it's not a coincidence that Melvin Capital is the main hedge fund that lost this money. I think you told me that they're down 53% right now. They're
53%.
Oh my God!
In January, try taking that back to all the people who gave you their money and saying, "Hey, we just lost over half of your investment on fucking GameStop.
If you want to know what that number really is, they had $12 billion in their portfolio at the beginning of 2021. Talking billions of dollars on one company, and there was multiple. Anyway, so they requested a bailout. They got a bailout from Citadel and Point72. And like I said, it's not a coincidence that Citadel is the main clearing firm behind Robinhood's transaction.
Yeah, that's who Robinhood sells their spreads to.
Right. So they had something to gain from this. They had, to use the term, investment in how well both these companies did. I mean,
yeah, but I feel like people aren't as mad about how Robinhood makes their money yet. I mean, there are people that, but it was they lied. They lied to the public because they said, oh no, Vlad, whatever his last name is, went on CNBC and had his hostage interview where he said, oh no, we've got enough cash. We're not having a shortage on our clearinghouse requirements because each one of these brokerages has to have a specific amount of cash set aside to settle and get their trades cleared through those clearinghouses a couple days after you actually go and hit that buy or sell button. And that wasn't the case because apparently they had to wake up at 3 a.m. on the West Coast on Thursday night or morning and go and figure out, oh shit, how the hell are we going to get enough cash to get through the weekend? Because they ran out and raised $2.4 billion from their existing investors over the weekend. And that's more money they've raised in the lifetime of the company, and they raised it in 3 days.
Yeah,
but they were sufficiently. They had enough cash apparently on as they said. So they lied, and people got pissed, and they restricted buys because they couldn't afford it, and they weren't. They weren't honest up front.
Right, and so all you could do was sell, and you know what happens when people sell. A large portion of people sell. Stock goes down.
Stock goes down, and the shorts get a little less out of the water.
Yeah. So, like we said, regardless of what they released today, at some point they clearly were lying. Even if this email is completely true. Yeah, it's not a good look for Robinhood.
No, they got caught with their pants down of the activity they promoted, which is a free trading marketplace, going and running up whatever stock you want. Doesn't matter how indebted the company is, doesn't matter how shorted the company is. And they learned what happens when an entire group of people, millions of people, went and banded against a few hedge funds. But what that translated to was 5 stocks got run up and bought so much that they couldn't clear all those trades through in just a few days.
Right. Well,
I mean, it's not great when people were pissed. They were pissed about the market manipulation. Then they were pissed they lied. And what Robinhood saw, despite the record number of downloads on Thursday, they were the #1 most downloaded app in the App Store. But a lot of people got pissed and left. Right. Public had one of the greatest social media postings I've seen, other than Popeye's putting out their Tendies tweet about this surrounding this. But Public went out and said and re-upped their free stock slices for referrals for people to join Public. Public, if you don't know, is a competitive brokerage app. And Public also has announced that they don't sell the order flow like Robinhood does. So they don't make this money off of your trade by giving you a worse price for his company.
Right. And something to be said too, and we have no affiliation with Public at all, but they are,
unless they want to have an affiliation with us, which case we'll gladly sell out.
Exactly. Not even sell out. They're a great company. They're a great company. I'll admit. I am planning on making a switch to them. I was going to do Ameritrade or Fidelity, and everything I brought in Public looks great. I'm switching over from Robinhood.
But both
making that leap.
But Fidelity, Ameritrade, Schwab, E-Trade, they all saw net new downloads as people left Robinhood and went to the names that they've heard forever, probably that their grandpa has given them a stock in back in 1980 or something. And it's just been sitting there, or a bond or whatever. But yeah, all of their Robinhood's competitors saw accounts leave and money flow out. And I don't know. Do we think they'll actually pay the price for this, or do we think they're actually going to come back stronger than ever from this? Because I'm actually leaning towards the latter, and I'll tell you why if you want to hear.
Please tell me why, but before you do, I think it's the opposite. I wouldn't be surprised if this is the slow downfall of Robinhood unless they do change something, which you might know more about here. But like I said, I'm following what I'm thinking. I'm out. I'm going to public.
My guess is the people who downloaded on Thursday won't leave over what happened this weekend. If they even got money in at all, they could have just downloaded it. I think I'll preface it. It has to do with the net inflow of cash from new accounts versus net outflow of cash of people like you who are leaving to go to a different brokerage. The fact that they didn't have to go find new investors to go raise that 2.4 billion. It's the fact that they got their existing investors to double down on their investments. That's why I think they could come back even stronger, and they're not changing their business model. So Robinhood is just going to continue to promote for its investors to make as many trades as possible so it can make more money. So I don't know. I think it severely harms their IPO chances, at least in the first half of 2020 until people don't remember what happened here. But we'll have to see if it still just is the number one brokerage amongst people our age.
Yeah, I'm curious to see what's going to happen.
They're also still out there apparently fishing for another billion in line of credit on top of that 2.4 billion.
Thing. Yeah, I just don't feel good being associated with someone that directly influenced the market like that, or what I believe they did. So it just makes me feel better switching over, and I wanted to anyway.
Yeah, I mean, I did
issues off the bat. Yeah, you did it.
I did it before GameStop was even thought about in people's daily lives. I did it last year, kind of in the beginning stages of the pandemic. I will admit it's not easy to get your stuff switched over. I moved to Schwab, and it took about 2 weeks. And if you're a trader and you're trying to make trades, here, free advice. If you're still trying to make trades to make money or get out of AMC, GameStop, KOSS, BlackBerry, whatever, don't switch accounts right now until you're fully out and you're done, or because it basically locks you out, and it takes a few weeks for all of your stocks to transfer over to the new brokerage.
Right. So people, what I would want to know is why did you switch to begin with? It wasn't an ethical thing. It was a personal thing, right? I mean,
yeah, it came down to so Robinhood's user interface, what you see when you open the app, is really good. I will admit that. When I want to quickly look up a stock price, I will still open Robinhood to do so, or I will Google it. I moved to Schwab because it's a more established brokerage. They've also got better research, and the research is why I did move, and it also was better at the time. I don't know. I can't comment on Robinhood's options trading now, what it looks like. At the time when you bought a Robinhood option, you're kind of just guessing where you're not necessarily where your break-even price was, but if you were going to do a spread, where your profitability inflection point was and where your loss inflection point was if you were doing a spread. So I didn't like that, and it was just a lot of guessing on the options front, and Schwab provided that. And I did my research. I went online, I looked up which brokerages are better to switch from Robinhood, and Schwab is what I decided on. And I've had E-Trade and TD Ameritrade before in past when I first started investing. Not dogging them, I just went to Schwab.
Right. And just to give Robinhood a fair shake here, they have improved their interface for options trading and to give you some research behind it and education, even. Like, they've done a good job, but it was in reaction to
not great.
They have failed in the past, that people had gotten screwed over because young traders like me, and maybe not like me, but some very impulsive traders that didn't really know what they were doing with these options trades and got screwed over and ruined some of people's lives. And that's not all Robinhood's fault, but when they have the ability to provide this stuff and they don't.
Yeah.
It falls a little bit on them.
And just like the people who are still holding the line, if you think there's still a line to hold right now, if you're losing money, it's your fault at this point. You knew the risk when you invested that money. You knew it could go to literally zero. It can go to zero. Stocks go to zero. If you don't believe me, go look at Enron. Go look at Lehman Brothers. But yeah, it's the same thing with options. Like you said, you got to know the risk, but a lot of it is you just have to learn, and you have to have sufficient resources to set out and learn. I learned on TD Ameritrade's platform. I deposited 50 cents just so I could get access to all of their learning library when I first started out. I don't know if that 50 cents is appreciated at all, but that's how I did it. Took it upon myself to go learn because nobody taught me in school how. We both came out from Austin public school system. They don't teach you shit like this.
It's not as awesome, don't worry. Yeah, what I was saying earlier too is a lot of these brokerages, I know Public does, they will pay for whatever transfer fee that's associated with.
Yes, Robinhood does have a $75 transfer fee. It's kind of a joke, but whatever. If you're looking to get out, you're already willing to pay it.
Right, but a lot of these are claiming now, and to give you incentive, especially that they will pay for it, and you just have to click a button, and they reimburse you for it. So this one thing to keep in mind, even though it is a pain in the ass, it's a process, but
yeah, it's not a quick process. Just because you see somebody on Reddit saying, "Fuck this, I'm leaving and going to Public or Webull or eToro." Make sure you know what goes into it first before you go and try to do that yourself.
Do a walkthrough.
God damn it. Just know it. Just learn what to do. That's all I can say. Know the risks before you deploy your money. If you made money on these trades, hat off to you, man. But I made money today when all those sold off and the money went right back into normal stocks.
Today's a great day. I was very happy when I just checked tonight.
I know. But yeah, in terms of Robinhood's future, like I said, my point on it depends on how much money left compared to how much came in. And we may not know that for a while. They're not a public company. They don't have to report that to us anytime soon.
And they probably won't be for a lot longer than we thought.
Yep, a little longer now.
Maybe not a lot, but at least longer.
Okay, well, here's the question we'll end on. If you're on the Robinhood board right now, are you terrified if you go public that this Wall Street bets, they're not a mob, that any of these Reddit traders and other people that are our age are going to go and absolutely short the shit out of your stock? Because I think they will. Long memory.
And not just soon, if it happens soon. I mean, they hold grudges. They will probably be at least tried. I don't know if it'll be successful if it happens in a year, 2 years, 10 years, whatever. They won't forget.
No, they're not going to forget.
And they will troll as hard as they can, and apparently trolling works, at least temporarily.
Robinhood, don't doubt the power of the meme.
Never.
Nope. All right, everybody, thanks for listening. Like, rate, review, subscribe. You get it. See you next time.
Bye.